not fundamentally justified is not an excuse. Why markets can get worse until a central bank response, and yet the market's had a great 3 days. I mean, I think the Dow's up over 6% in 3 days. But just tell us what's going on more broadly.
Well, I think what we may be missing is, you know, we look at the real economy. We're used to looking at wages and jobs. In the U.S., the story is still this is looking very good. But when you look around the world, there's been a significant nominal price shock in terms of the collapse of oil prices, how that's fed through. We saw that second shock come through for a second year. And I think what isn't appreciated is that when you have persistent price shocks like that, it creates problems for companies to adjust. It creates problems for very leveraged countries to adjust. And sometimes the shocks, because of that, sort of catch you by surprise, because it's that adjustment on your balance sheet that can sometimes feed back in. And I think this is what we're seeing. And I think you're starting to see central banks respond. And so I think this is exactly why they're coming in, realizing that they may need to smooth a situation that, from an economist perspective, looks perfectly fine in terms of what's been going on in the real economy.
We've had some very interesting comments coming through from Kuroda from the BOJ today, calling for coordinated action here and specifically pointing the finger at the Chinese and the United States. What does Kuroda want here from the Fed? Does he want some support around negative interest rates, some better commentary perhaps, or does he want the Fed to stop hiking? You know, what does he want to achieve?
If the Fed
here?
hikes, isn't it better for the Japanese?
Well,
Doesn't
in terms of the
doesn't it
weakness
serve
of
their
currency.
goal? I don't know.
Well, it does from a yen perspective,
yeah, exactly,
right? Yes. Yeah. No, I think what's interesting is you are building a lot of anticipation into the G20 next week. And, you know, while I think the expectations of Plaza 2 coming through out of this are probably far-fetched at this point, I do think that the G20 is building up to make a more blunt attack at a strong U.S. dollar. And you can look at the Banxico decision yesterday to come through and hike. You know, it's certainly complicated. In a perfect world, the message would be, please sell dollars, yen, Swiss, buy some EM, don't really touch China. You know, that's a hard message to deliver. But if they were to just come out and say, look, we would like the dollar to be 10% weaker and emerging markets up 10%, and we were going to shift our composition of reserves to do that, oil prices are doubled. That gives you a lot of protection on that nominal shock. And someone like Japan might be okay in that situation.
Why not one of the ideas I just put forward about talking up negative interest rates becoming more positive? This is what Coach Lakota had spoken about, the former Fed member, about whether the US could be a little bit more supportive about this type of policy. The Japanese themselves kind of shot themselves in the foot by being so negative about negative rates and embarking on negative rates, doing exactly what they said they wouldn't do. So some support from the Fed around this type of policy might be good, because we saw the reaction was so negative in terms of the strengthening of the Japanese yen. Wouldn't this have the impact of weakening the Japanese yen, which would be supportive for the idea of getting inflation back to a 2% target in Japan?
I think it is interesting. I mean, personally, I think we can be much more negative in terms of negative rates from where we've gone. But you have definitely seen, after the Japanese decision, much more fear in the markets, uncertainty over how negative rates will work. I think in the Japanese context, some of that is circulated around exactly how old of a demographic profile it is. These are people that do have to be savers because of where they're at in the stage of life as an economy. Do negative rates become more bad than good in that sort of situation? And so I think it would be good if central banks could explain that policy, but I don't know that we actually have all the facts that we'd actually be able to say that negative rates are definitively a great policy.